Hello, this is Dean Malone with CompassFX. Hope you're doing well today and you get some good trades. A trader fairly new to trading asked me if I would do a video about the pivot point and pivot levels. Where does it come from? How is it used? And some of the specifics about it. So if you're familiar with pivot points, this may be a little bit of a refresher. But if you're not familiar with pivot points, check this out. A pivot point is a technical indicator used to predict a change in support or resistance for a currency pair, but it goes much more beyond that. Pivot points are used in all forms of trading, whether you're trading stocks or currency pairs or futures or commodities. A pivot point literally goes back years ago when traders were literally trading in the pits, yelling back and forth, buying and selling going on. Well, before the day got started, they'd use the previous day's information, the previous day's open, high, low, and close, to determine a daily midpoint. And if the market opened up at this midpoint and traded up, then traders would look to trade long until it didn't go any higher. Now, if the market traded below the daily midpoint, then traders would be looking to trade short until it wouldn't go any lower. Well, take it into today's trading, we use the same process. The pivot point uses the previous day's information to determine a midpoint to work from. And the idea is simply this. If you're trading above the pivot, look to trade long. If you're trading below the pivot, look to trade short. So we use the pivot point and the pivot point levels as predictive indicators, looking for the market to treat the pivot as a support if going long, or treat the pivot as a temporary resistance if trading short. Well, let's look at this a little bit more in detail. When you look at pivot levels, the three most important pivot levels begins with the pivot point. Now, one of the ways to calculate the pivot point is simply to look at yesterday's high, yesterday's low, and yesterday's close, add all three, and divide by 3. Now, some calculate the pivot point by adding the open. So if you have the open plus the high plus the low plus the close divided by 4. However you do it, that's your pivot point. Now again, that pivot point, depending upon how the market is moving, is going to act as a temporary support or a temporary resistance. Then we have to look at that normal range. Remember, I was talking about how the traders would trade till the price went up so far and it couldn't go any higher, or trade short until it wouldn't go any lower? Well, we have what we call our normal trading range. And to begin with, you have the first resistance level. This is simply taking the pivot point, multiplying it by 2, and subtracting it from yesterday's low. That gives us a resistance level high to trade up to. And this resistance level is referred to as R1. Now on the flip side, we have our first support level, referred to as S1. And this is where you take the pivot point, multiply it by 2, and subtract it from yesterday's high. And this would be the level that traders would look to trade down to. And between the R1 and the S1 would be your normal trading range. This is where we'd look for the market to move up and down and cycle back and forth. So it looks something like this on a chart. You have your pivot point, and you have your R1 above, your S1 below. And this would be the normal range that we would look for the market to trade within. Now when it comes to trading pivot points, make note of this. This is so important. If the following day's market price trades above the pivot point, it may be used as a new support level, and traders will expect upward market movement. That goes back to me talking about how traders in the pit, looking at midpoint for the day, let's call it the pivot point. If the market trades up, they're going to treat that pivot point, that daily midpoint, as support. Let's take a look. So if you look at this right here, the market now is starting to move, where you see that blue arrow, the market is starting to move above the pivot. So traders would be expecting to see the market continue to move up, potentially to the R1. Now on the flip side, if the following day's market price trades below the pivot point, it may act as the new resistance level, and traders will anticipate downward market movement. Let's take a look at what that looks like. As a matter of fact, looking at the exact same chart, you can see what the market did. The market came down to the pivot level, and look what it did. It traded down to the S1, where you see the red arrow. So the market did exactly as we anticipated it to do, trading below the pivot point down to the S1. Now the market's pushed back up, it's moving back above the pivot, the potential to see it move to the R1. So what happens when the market trades above the R1 or below the S1? Well, we have more pivot levels. We look for the market, if it's moving to the upside, we look for it to go beyond the R1 and push up either to the R2 or the R3. This is what we refer to as above normal trading range. And you would use the R2 and the R3 as potential targets to trade to. On the flip side, if the market breaks below the S1, we look for the market to trade down to the S2 or the S3. This would be below normal trading range. And again, we'd use the S2 or the S3 as trade targets. And again, the market has a tendency to trade to these levels a lot of times because they're built in to algorithms, to systematic robot trading, and a lot of traders look for them. They're targeting these levels. Well, this is just a little training on the pivot point and the pivot levels. As you trade, my recommendation is to keep your eye on the pivot level and the R1 and the S1 if you choose to use pivot levels. Identify the direction of the market, identify how the market's reacting to the pivot level. If it bounces off the pivot level and moves up, target the R1. If the market trades below the pivot, comes back and tests the pivot and it treats it as resistance, then look to trade to the S1 level. Well, this is Dean Malone with CompassFX. I hope this information will help you in your trading. Y'all make it a great day. Get some good trades, and we'll talk to you next time. Bye-bye.